All right, we got about 13 people on. Can somebody give me a thumbs up if we're getting okay sound? If you can hear me all right? All right, excellent. Thank you guys. Welcome to week 8 of the Rational Investor School for Trader Development. Um, this week we've been looking at volume analysis. Excuse me. And volume analysis involves multiple components. We have our favorite indicator, the OBV indicator, for measuring volume coming into or going out of an asset. We use a moving average with it. You'll see that's a pretty common theme with a lot of uh, indicators that we use. And we look for secondary confirmation with the volume um, uh, indicator itself. And so that's where we get into a term that we use, which is volume impetus. Okay, so let's dig into it here. We'll go through the slide deck, then do the quiz, then I will hit the Q&A sheet. So, all right, topics we're going to cover. So the core class lesson covers what OBV is, what the four components of that OBV are, uh, and we talk a little bit about divergence and how we find it. And so I'm going to want to dive into that a little bit. All right. And then, of course, we talk about how we implement OBV. Now, before we get into the particulars, it's important to have some framework on where you're going to fit this um, into your trading and into uh, your setups. So our setups typically consist of three um, components, right? We always need at least three reasons for a trade. Um, we start with location, and that's where we're going to be using the Fibonacci retracement tool to identify reload zones or bot load zones. And then we go into momentum, and this is the first of the momentum indicators that we're going to be learning. This one's specifically based on volume as opposed to price. Um, and then the third category we use is market structure, and that's where we're going to be looking at the um, assets price action itself, and we're going to be looking for those market and transition patterns, those M's and W's, triangles, heads and shoulders, candlestick patterns that we learned last week. So that's where this fits. This is part of that momentum category. So OBV stands for on balance volume, and it's a method used to detect momentum in volume. Um, the calculation relates to the price change itself, right? So the volume is derived from um, the the OBV is derived from the volume um, information as well as the price change information. The OBV provides a running total of volume and shows whether this volume is flowing into or out of a given security. All right. So Joe Granville developed it originally. He had a lot of success with it. Like many traders who develop an indicator, though, unfortunately, he started using that exclusively of any other indicators, and this got him into a little bit of trouble at one point in his career. And this is one of the reasons that we try to use OBV in conjunction with other um, indicators and with other reasons for a trade, the location and market structure reasons. All right. So OBV attempts to detect when a financial instrument is being accumulated by a large number of buyers or sold by many sellers. The traders will use an upward sloping OBV to confirm an uptrend and downward sloping to confirm a downtrend. Finding a downward sloping OBV while the price of an asset is trending upwards can be used to suggest that smart traders are taking their exit positions and getting out of an asset. Okay, so So an example here. So we have the OBV study, which is the blue line in this chart. The red line is the moving average, right? And we use moving averages a lot because moving averages give us a good picture of what has the trend been. Um, when we see moving average crosses, that gives us an indication that whatever we have that moving average on, whether it's an indicator or whether we're talking about moving averages in price action, which we'll learn more about in level 2 specifically. Excuse me, sorry, a little irpy today. Um, when we see crosses of the moving average, that gives us an indication that whatever we have the moving average on is potentially changing direction. We look for specifically market structure, so like M's and W's, around those crosses of the moving average. It gives us better confidence that that indicator is potentially reversing. So we have OBV line in blue with moving average in red, right? We look for market structure crossing that moving average. And then once we have that, we look for what we call volume impetus. Okay, that's these big chunky volume bars at the bottom. What we're looking for is um, a downward slope, if you will, in whatever camp has been controlling the market. So this has been a bullish market here. So we're looking for the bulls to fall asleep. So we're looking for progressively lower highs in the volume of the bullish um, side, right? So you'll notice they're not three consecutive lower bars, but rather 3 points where we've volume has come down and then back up, but at a lower level, down and then come up, but at a lower level, and then down again. And when we get then on that third down, so down, 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 that third down after the third higher low, we want to see it get below the lowest point um, previously, right? So that's where we're seeing lower highs and lower lows, right? Um, and that tells us that um, the bulls are falling asleep here. Really, this line, so kind of here on this bar, um, that volume impetus, um, the three lower highs is really the important part of this, right? And then once we see that, that gives us the momentum indication. Had we been in a good location and we looked then at the momentum reversal information here, and if we had market structure, that might have framed a trade to get us in short on this. All right. Now, let's talk a little bit about divergences because divergences are easy to get a little confused by. So with divergences, what we're looking for is the trend of an asset and the trend of an indicator moving in opposite directions. Okay. We measure bullish, and this is a little counterintuitive when you first hear it. We measure bullish divergence by looking at the lows on an asset. We want to see lower lows, and we want to see higher lows on the indicator. Okay. It's important that we measure those two because sometimes you'll get a price action that is either a expanding triangle, right, or a closing triangle, and those aren't going to give us the right signal, right? So it's important you measure the correct side um, of the asset and the indicator, depending whether you're looking bullish or bearish. So bullish the pressure comes from underneath. So we're looking at bottoms, we're looking at lower lows in price, higher lows on the indicator. With bearish divergence, we're looking at higher highs on the indicator and lower highs on the indicator. Higher highs on price, lower highs on the indicator. I think I misspoke there. Where we see that confirmed, the divergence confirmation, is once we have established that we have, say bullish, we have lower highs or lower lows on the price, and then we have higher lows on the indicator, then we look for a W after that. Um, in the case of OBV, we want that to be crossing the moving average. Um, and that's our confirmation point. This candle here, though that wasn't the confirmation in price, was the confirmation of the divergence in this, the bullish divergence in this indicator. And then after we have that divergence confirmed, then we look for market structure to get us into a trade, right? And so that would have come on this candle. We would have seen this W come in, and the point at which we'd be above this middle bar would have been the close, this close of this candle. So we would have entered after that. Now I would have entered at the candle body open of that closing candle. That's my typical. Um, but that's how we do that. Conversely, with bearish, right, we see this divergence come in, higher highs in price, lower highs on the indicator, and then we look for an M crossing the moving average to give us confirmation of that divergence. Okay, and that comes here. Looks like that came in on this bearish candle here. Then we look for market structure following that, which would have been over here to frame our trade. Okay. All right. It seems fairly straightforward, but I'm going to walk through putting it on your chart, how you assign the um, scale for your elements, and we'll go from there. Okay. Um, the important part is understanding where it fits into the overall picture. We don't trade on OBV alone. We don't um, trade unless we have it matching our setup, and our setups are never just one element. Our setups always have location, they always have momentum, and they always have market structure. Well, I wouldn't say always, but they might have different components. They almost always have market structure because that's how we frame our trades. Um, but you'll see in the sample setups that I gave you guys, the copies of my setups for my write-up on planting flowers and on the bot and on the three-step setup, that what I use is actually I use multiple momentum indicators. So I use OBV and MACD and one that we're going to be learning called Willie and RSI, right? And I look for situations where I have multiple um, momentum indicators, um, all giving me the same signal. Okay. All right. So also linked off of here is the OBV script that we use. So we've got a script that just combines the moving average and the OBV. There's also out on, come here, let me find it. Out in the public library, there's a script done by Stumer, I believe. Where's my favorites? Favorites. Or Alex. Actually, let's use Alex's. So we've got this base one by Stumer. Alex, um, one of our guys that's been around the site quite a bit. He was one of my TAs a couple terms ago. Um, he also gives us this EMA, OBV with EMA and divergences. It tries to identify divergences for you. It's not the no indicator is 100% good at identifying divergences because almost none of them so far that I've found do they look for divergence confirmation with market structure. So you kind of have to do that part yourself. So if I were to use this, you'll see we have these potential divergences highlighted. I actually turned those off. I just find that the signal to noise ratio is a little poor. And then we have Stumers up here above. They're just different colors. You can adjust the colors yourself, so it doesn't matter which one you grab, right? The key part is that you have the OBV and that you have um, the moving average on there. Now oh, you know what? Let me also pull the volume up. I'm going to show you how we put the volume down, overlaying it like that. So once you have OBV, you can come in here and change the colors, and I like to do that. I like to have my signal line um, in orange. I like to have it a little bold. I like to have my EMA in red. That's just how I've laid mine out for a long time, right? So hopefully that's pretty clear for you guys on the video. um, all right, so uh, there are a lot of questions in the Q&A sheet, and we will address them shortly, asking about how to read a positive and negative OBV. Honestly, I hardly ever use that. When I'm indicating trend on an asset, um, rather than something like positive or negative OBV, I really rely more on looking at the chart itself and on looking at the retracement levels. And for instance, have we rejected a 38.2? Are we continuing on that trend? And really, I'm looking at, are we seeing higher highs and higher lows, or lower highs and lower lows? The positive and negative on the OBV is not as important as the structure that we're seeing. Are we the M's and W's, and are they crossing the moving average? Okay, so let's add volume on here, and I'll show you how we put that down on the thing. So we choose the built-in volume here, and we can any indicator we can move down to other panels, right? So I take volume, I hit these three dots, I go move to existing pane below, and that puts it with the RSI, and then I'm going to do it again. Move to existing pane below. Okay. What I typically do with volume, I can always see the volume number if I mouse over this, and you see these numbers up in the upper left corner will tell you the volume numbers, but I don't really care what um, what the value is on that. But what I do want to do is see the volume clearly. And so what I'll do is I'll come in here and I go pin to scale. It's on no scale now. And that's actually pretty common. So no scale works pretty well. Um, you can pin that to the left scale if you do want to see your values, but you don't want it to interfere with the OBV. Right now the OBV is pinned to the right. I already said I don't really use the positive and negative OBV, so there's no reason I couldn't put like volume to the right and OBV to the left. But that's all the pin to scale does, is changes where you have the scale done off of. But I'm going to do no scale. Okay. All right. And that lets us see OBV along with everything else. All right. Let's look at SPY where we've got a good amount. Okay. So volume's been relatively low overall. What I may do, and this is where the pinning is helpful, right? If I pin this to the left, if it's down here like this, it's kind of hard for me to see, right? But what I can do is I can expand that. Where's the thing? Oh, yeah, there we go. Then I can grab that and I can just expand this up a bit more, right? And that just lets me see the volume bars a little better. I just got to go in and grab them and move them around so you can see them. But that's something I will often do if it's a little unclear. The other thing you can do is if you hit this little, I don't know what to call this little vertical bracket here, it'll expand that panel to fill the whole screen, and that can make it easier to see things as well. And you just hit it again to make it drop down into the chunk of the panel that it was in, right? It makes that panel small again. So yeah, Randall, that can be a real problem, not being able to see the volume bars. Um, So that's how I deal with it. It's a little complicated to try to type out what I'm doing, but hopefully my visual demonstration has explained that a little bit. Well, what you can do, so Randall's saying when he pins this to left scale and he goes to a new asset, the volume scales out of whack. What you can do is then when you get to the new scale or get to the new asset, you just come in here, you right click, you go auto, and it'll reset the volume to fit in the scale. And then you can expand it again as needed. I find this method of just so you don't have to click on this. You can just double click on the background on a pane and it'll expand the pane, right? And that can be pretty useful for seeing the volume. And then you can keep it um, either not pinned at all, like full screen, or you can keep it set to auto. And then you double click on the background again, I'll shrink it down. Cool. All right. Let's hit the quiz really quick. All right. What is TRI's preferred volume indicator? What does it measure? Well, we like the OBV, and it measures the net in and outflow of money into or out of an asset. What is the term we use to validate a trend change in the OBV index? Okay, we're looking for market structure. Okay, that's M's and W's. Specifically, we want market structure that's crossing the moving average. Let me do that really quick. So Rush says move. Rush slowly says move the OBV onto the volume indicator instead of the other way around. Um, you can, and what that's going to do is it's the equivalent of um, when you put an asset on by default, it's right aligned. If we take the volume, and I'm going to do an intermediary move here, and I go pin to full screen, I go OBV pin to left scale, right? And then we take the volume and pin this to the right scale, pin the scale A, I think that's called. Yep. Then that's what that's going to do. Okay. So if we move this to this pane above, right? Move our volume. I don't know why I must have some really chunky high volume earlier or something. I don't know why it's scaling it up so high. Let's try this again. Let's add volume all over again. Yeah. Move to existing pane below. We're going to move it to its own pane this time. We're going to go move to new pane below. So we have a bigger volume. Yeah, that's why it's these big bars here. And let's take OBV. We're going to move to existing pane below. There we go. That might be a little clearer for you to see. Okay, so there's a lot of different ways you can play around with this. You can also make OBV no scale if you don't want to have this little chunk of real estate taken up. It doesn't really matter to me, but side note, what size monitor when using? I'm using a 13-inch laptop. Yeah, that's going to make a difference. I've got a pretty big monitor here. I mean, it's not huge, but this is like a 27-inch monitor, I think. So significantly bigger than your laptop screen. All right, get back to the quiz. Volume impetus is used to confirm what we are seeing in the OBV indicators. Confirm. Aside from impetus, another tool we use to validate what we are seeing in the OBV indicator is the moving average of the OBV. And then to register a volume impetus reversal, we must see 3 lower highs by a particular camp. Now, it's worth noting volume impetus will, so falling asleep happens, and then the other camp waking up happens. The other camp waking up happens very often will occur um, on the breakout that you want to be in for your trade on. So don't wait for the new um, for the other camp to wake up, right? Before you frame your trade. You as soon as the camp that has been in control falls asleep, then you want to start looking at market structure on your price so you can frame your trade. Okay. When considering volume impetus, we are really asking who is driving the bus, right? Who's in control of this market right now, bulls or bears? And then, should a volume impetus reversal occur, what term does TRI use to describe that reversal? Right, we're talking about them falling asleep. And then finding a bearish OBV divergence while the price of an asset is trending upwards can be used to suggest that smart traders are beginning to exit their positions and therefore shift in trend may be coming. That's true. That's true. That's what we're looking for. And then per the lecture, please select all the key components of the volume of the OBV study. And this is important. So I refer to my study when I am marking my charts up. I refer to this as my volume study because it encompasses so much more than just the OBV line, right? We have the OBV line, right? We have the 13 EMA of the OBV. We have volume confirmation, and we have price, and we have market structure, right? All of these components need to be there for our volume study to tell us what we need it to tell us. If you only have part of this, you don't have a volume study indication. Okay. On balance volume is a very powerful analysis tool and can by itself justify entering a trade based on confirmed divergence between price action and volume. No. No single thing is going to be enough to get us in on a trade. Okay. It's absolutely critical that we become comfortable with that idea, that we need to have our multiple reasons for our trade. We have to be in a good location. That's huge. We've got to be um, we've got to have our momentum indication in place, and then we've got to have our market structure. Excuse me, guys, I'm really sorry. And then we've got to have our market structure in place before we get into a trade. We absolutely have to have all of those in place. Okay, and that's critical. Come on, stop. When analyzing OBV and the OBV moving average, what is critical for a strong signal validation, either bullish or bearish? And that is structure in the not moving average, structure in the OBV line with a moving average cross. And then what is the easiest way to identify if an asset is a bull or in a bull or a bear trend? And that's where we talk about the OBV being positive or negative. Now, in practice, I don't really use that. Yeah, it's pretty low hanging fruit. It's easy to identify um, a overall bullish or bearish state in terms of volume, but I don't find it as reliable as looking at the price action itself, looking at the Fibonacci retracements, and seeing where we are in the flow of things. All right, the OBV moving average, used in conjunction with the OBV line, is used in conjunction with the OBV line to confirm and validate price momentum. That is false. This is volume momentum, not price. Kind of a tricksy question, which may or may not ever update for us. Just watching the spinning. The hypnotic spinning circle. Come on. You're killing me here. Let's reload. Might break the whole quiz here, but I think it'll be alright. There we go. Based on the lecture, when measuring volume impetus, either bullish or bearish, what are we asking ourselves? Is there more participation or less participation in this market? That's what we're asking ourselves. A price momentum signal is more powerful than a volume momentum signal. That is false. Actually, it's kind of the opposite. Typically, a volume momentum signal is a more powerful signal than a price momentum signal. All right, the moving average of the OBV indicator can act as support or resistance for the OBV itself. That's true. That's part of why we use the moving average, right? Whiskey and coffee. Oh yeah. No, I'm more of a Bailey's and coffee fan. That's not what's in here, but I'd be pretty happy if it were. I don't like to dilute my whiskey. All right. Here's the quiz. It's a pretty short quiz this time. It's a fairly simple concept overall. It's just there's some particulars, particularly around how you identify divergence that I think are pretty important. All right, let's hit the Q&A sheet. Funny thing about coffee and Bailey's, I had never had coffee and Bailey's until I was 23, and my roommate was making beer that day, so he cleaned out the whole kitchen, and while making the beer, he brewed some coffee and put some Baileys in, and the clouds parted. There were cherubs singing. I was like, oh, I need to be careful about this. This could make me an alcoholic because it's delicious. But fortunately, that never did occur. But I do enjoy some Baileys and coffee. All right. Questions. The volume indicator on TradingView has a setting color based on previous close. I remember Brian talking about in the DB saying we should enable that setting. I'm not a big fan of that myself. It changes the color of the volume bar to green instead of red when the close of the price is above the close of the previous candle, even if the current price candle is a red one. Yeah, I'm familiar with it. I am personally not a big fan of doing volume that way. Um, we have a lot of studies, including the volume impetus that we're learning this week, uh, that are a bit reliant on the coloring of the candles, right? And so I don't particularly like it. What we're talking about is I think it's it's color on previous close, right? You can see how that changes things quite a bit. And yeah, I'm not a big fan of that. Um, if Brian did recommend it, I would say, and you want to get his take on it, post it into the BCS um, questions list, and he could probably talk about it during the Broiler Chicken show. All right. Do we only do OBV studies based on Heiken Ashi candlestick chart patterns, or do them on normal candlestick patterns as well? We normally do them on regular candlestick patterns. For some reason, Brian recorded, and I don't know why, he recorded his example videos using Heiken Ashi. And for those of you interested in what that looks like, Heiken Ashi um, changes the coloring of candles pretty significantly, right? Um, I don't use Heiken Ashi. Almost nobody on the site that I know of uses Heiken Ashi regularly. We just use regular candlesticks. And regular candlesticks is absolutely fine. Yeah, Kevin, as you say, level oneers really shouldn't be using Heiken Ashi at all. Yeah, it changes too much, too many things that you're just learning about. So Let's stay away from the Heiken Ashi for now. Use regular candlesticks, please. Can you please demonstrate how to plot the 13 EMA on the OBV? Well, the easiest way is to use one of these scripts that we've already provided. Um, I don't know that there's a way, there might be, I think there's a way in here to add an indicator for this, add an indicator strategy on something, right? So if we had the regular OBV and we threw it on our chart, we could then come in here and go add indicator, moving average. We put an exponential moving average there, and that's going to do the same thing. We have to change the coloring on it so we can see what the heck's what. We need to change our periods. This is a 13 EMA, but essentially that's how you can go about it, right? But you're going to be limited, especially when it comes to if you're using a free account on TradingView. You can only have, I think, 3 total indicators on here, and so this would count as 2 of your indicators, but this script would count as just 1 of your indicators. Okay. I'd like to at one point build the script so that it also shows the volume in here. Um, and it's worth noting, volume is sometimes easier to see as well. If you come in here, I think Brian does this on the lecture video as well, but you can come into volume and say we're looking for bullish volume, right? You can make your bearish volume um, transparent. So all you're seeing is the bullish volume, and you can, and vice versa. You could do um, the bullish volume if what you're looking for is bearish volume, and sometimes that can be a little clearer um, to show, especially when you're starting out, right? Okay. I noticed that OBV depends heavily on time frame. Absolutely. I found that stocks that have a negative OBV on the weekly but a positive OBV on the daily chart, what should we look for? Well, generally speaking, the only reason you'd be looking at positive and negative OBV is if you're looking at trend, right? And I always look for trend on the larger time frame, okay? Because what happens with an asset, right, is we, like in this case, right, we have this bullish trend, right? But in that bullish trend, if this is on daily, if we were to look on an hourly in this time period, right, we're going to see the opposite. We're going to see a bearish trend on like the hourly over these few days, right? Or even a 4 hour, right? This is like, what, a couple weeks worth of data? Let me look. Right. So probably got to here. So it's 15 bars. Incidentally, what I'm doing there is if you hold your shift key down and you click on the chart, and then you just keep your shift key held down, it'll give you a measure of like how many bars or how much distance, right? And that can be kind of handy sometimes when you're just measuring something. But we expect that in price. Price doesn't move in a straight line. It moves, like stairs. And so there are times on a shorter time frame where you're going to have a negative, you're going to have a downwards trend, but you have an overall upwards trend. What we care about is we look on the higher time frame, we look for that higher time frame trend, and then on a shorter time frame, we look for price to come back into reload zones so that we can get long and work with that larger trend. Okay. All right. Many of the assets that have a significant retracement recently have a negative OBV. Mm-hmm. Prices that are in reload zone are put in bottom and seem to be attractive for planting flower setups, but OBV is negative. Is that a no-go, or what's the relevance of the negative OBV? Well, I want to stress again, I don't personally use Um, Positivity or negativity of the OBV very often. Um, what I'm looking for is what is the longer term trend in terms of when I look at the asset, right? And I can see the price movement, so I can see the trend. Um, I don't really need to use something like as simple as a positive or negative OBV to tell me what the trend is. Um, you can use that when it comes into scripting or something like that, but yeah. Can you see how if you had price come up? So let's look at this just shorter, excuse me, shorter time frame stuff, right? Let's go into get rid of this. Okay. If we're looking at a retracement, by nature, if we're looking at a retracement in a bullish move, right? So let's say we had this move up and then a retracement, right? Bullish. Um, the retracement, in order to bring us back here, right, has to be negative. We have to have a downwards trend in order to have a retracement at all. At least if we're talking about off of a bullish move. If we're talking off of a bearish move, then we have to have a positive trend in order to retrace back up, right? So, that's pretty normal. Um, so it wouldn't really be a go or a no go. Again, I think you're putting a lot of weight on the shoulders of a simple calculation like a positive or negative OBV. What you really need to be looking at is the full volume study, right? How do you use the OBV as an entry strategy confirmation? It seems to follow perfectly on past data, but at what stage does it signal entry or possible exit? Well, that's not exactly how that works. Okay, remember our order of operations. We look for location, then we look at momentum, and then we look at market structure to frame when we enter or exit our trade. Okay, that market structure is going to be what tells us where to enter. It's going to tell us where to set our stop. Our setup is going to tell us where we exit the trade. Okay, so we don't really use OBV by itself as an entry or exit indication. Okay. Now, as far as when do we have a solid signal from the OBV? Well, we need all these things in alignment. We are going to need an M or W. Well, first of all, we need a location before we even looking at this. So let's assume we're in a good location. We're in a reload zone. Let's say we're in a bullish reload zone. Then we're specifically looking at the OBV. We're looking for a W crossing the moving average with the um, bears falling asleep. Okay, because we will have been moved down into this reload zone, and we want the bears to be falling asleep on volume impetus. That's our study. Do we have and how I write that up when I write that up on my charts is I'll say OBV W crossing moving average with vol imp. When you see that, that tells you I have spotted a W crossing the moving average, and I've got the bears falling asleep. Okay, that's what we need. That's a positive signal. All of those pieces together need to be there for OBV. And actually, how I list that is not OBV. I'll list that as volume. Okay, so all right. What's the purpose and the interaction of crossings of the OBV and 13 EMA in determining trend? Well, what EMA shows you, let's come into here. Whoops. What EMA shows you is what the price movement has been like. Let me just hide volume here for now. It shows you what, not necessarily price, but whatever asset the moving average is on, right? It's like a slowed down impact of that. So the moving average shows you what the last 13 periods have been like, right? So when we see a cross of that moving average, um, we are seeing price reversing. Like that's That's what crosses mean. When we see a lot of crosses back and forth like this, that means we haven't really established, right? We've got that's consolidation when we see this middle um, back and forth. But when we see a distinct move crossing the moving average, that's what tells us, okay, boom, we got this great big old W crossing the moving average. That gives us a good indication that um, the trend has changed. You'll also note that very often with moving averages, and this is how it is, on a downwards trend, the whatever you're tracking is below the moving average because it's pulling the moving average down. Think of it like that. Think of the moving average as being like you're in a boat and you're trailing a line behind you. Okay. Um, the moving average trails your uh, whatever you're measuring's movement, right? So if we're in a downwards trend, that moving average is going to be above it. When we're in an upwards trend, that moving average is going to be for the most part below it. Okay. So, so that's kind of what that tells us. Hopefully that answers your question. Going back, check this back. And I see people are putting the answers in on the questions. Perfect. That will help a ton for your studying when you get to the final exam time. All right. Sounds like you answered this question already in number 4. This one-day chart shows a build um, on the OBV. Okay. Well, this same chart using 4-hour candles doesn't, right? Okay. Does OBV less accurate at higher time frames or maybe more? Neither really. It's just you're seeing things occurring on different scales, and all of them are happening at once. So price might be getting pushed up on the daily basis, but on the hourly basis, they're pushing price down to get a good buy for future upwards movement, right? So it's not that one's necessarily more accurate than the other, but we look to the larger time frame um, to determine our trend, and we want to work with that just because uh, the opposite we refer to as knife catching, right? When you're trying to sell the dips, that's very dangerous and often gets people into trouble, right? Instead, you want to be patient, look for those dips to come in, and look for those as buying opportunities to get long on the asset, provided you get a setup that comes in, right? All right, off topic. I find it difficult to hunt for stocks, especially to track regular search process, as long as we do not know the precise requirements for a setup. Well, that's true. I can understand that. For momentum, I saved WV with 4 components, RSI, the other stuff next week's. For market structure, I saved formations, candlesticks, patterns. For location, I see Fibonacci retracements. Okay. Are there any other contents for locations that we use? Not really in level 1. In level 2, you'll learn some other things that can be used for location, actually quite a few. But for right now, let's just stick with Fibonacci retracements um, for our reasons. And we are at a point now, it's worth noting, that um, we can start evaluating things. We now have momentum, location, and market structure. We are now able to evaluate setups that I've posted before. So let's take a look at those again. Planting flowers. I wish I could go to a tab from here. That's not exactly what I wanted. Hang on. Setup. Setup. Can't I open as a tab? Oh, that's irritating. Okay, from here I can. Open in a new tab. Bot. Open in a new tab. Where's my 3-step setup? Open a new tab. Okay, so we're now at the point where we can understand a little more of these setups that I've shared, and we can start looking for them. So I suggest you start out using this three-step setup, okay? And this is literally the write-up that I use for my trading, okay? So we look for a higher time frame RLZ. So we're looking for price within this the RLZ zone, the 61.8 to 78.6 of a higher time frame move. Uh, and at the bottom of a subsequent reversal move. And what I'm saying there is we want to look for well, we can take the shorter thing here, okay? We want to look at our Fibonacci retracement. If we're looking for a long, then we want to look in this reload zone, okay? That's what that location criteria on my setup is, okay? Come here. This is so we look in the reload zone, okay? And this is the subsequent downwards move that I'm talking about in there. All right. Then we look for momentum. Now, note if we're greater than the 70.2%, add 1% to the trade risk. Okay. So, and how I work that in practice is anytime we're beyond this halfway point at the 70.2, and I just eyeball it, right? You'll notice I don't have it on my thing just because I think I try to keep it a little clean. I feel like it makes it a little messy. If we're in the bottom half of this, all the way down to the 1, I will add a percentage of risk. So let's look at how that looks, okay? So setup, 3-step setup, location, beyond, so what I'm saying is RLZ beyond 61.8% plus 1% risk if greater than 70.2. Okay, so how I'll do it is I put plus 1% under location. Okay, then I want to look for momentum. Now we only have kind of two momentum indicators, right? We've got RSI and we've now got our volume study. Okay. Now, the way I do momentum, I need at least two of these momentum studies to agree for me to be in a trade. Now, we're going to learn MACD and we're going to learn Willie. If I get three or more of my momentum reasons together, all giving me a bullish signal in this case, I'm looking bullish on this particular trade, right? If I'm looking bullish and I have three signals that come in on momentum that are bullish, then I will add a percentage of risk for that trade. If I have four, it's still only adding 1% of risk for the trade. But basically, it's do I have two? If I have two, I'm good to go. If I have one, not ready yet. If I have three or more, then I add a percentage of risk, right? So RSI, I don't know if we really have divergence here. Let me look at this low. Is this? Oh, I guess so. So that's higher. At the same time, we have lower, so we have divergence here. And we've got a W technically coming out of oversold. So that's a good signal. So what I do is I then type into my setup, right? I go W, actually div confirmed. And usually I'll put the date it was confirmed. So this, I'm looking at this, I don't know if it'll show me the dates if I'm expanded out. Let's see. Oh yeah, it does. So it was confirmed on this date. This is November 2nd, right? And so what I'll do is I'll say div confirmed 11. What do we say? The 2nd? 11.2. And then volume analysis. Do we have what we need? Doesn't look like it. We don't have a W. This low is lower than this right-hand low is lower than left-hand low, so that's not a W. So we don't really have that. So what I'll do then is I'll just say hunting. Okay. And then structure. Now, I don't even look for structure yet. We need to have our momentum reasons first. But that's how I would draw that up. Okay. Does that make sense? Now you can see this took off. It hit the price objectives of a move because we would have been looking at the 50% move, right? And I actually have a 50% thing that shows me the top, the bottom, and the 50% level, right? And you can see the price did come back up and hit that 50%, but we didn't really get a signal to get us in. At least not on a 4 hour. I didn't really get a basis. Oh, and actually this is a 4 hour, so it shouldn't have been 11.2. It should have been 11. Oh, it's gonna be a little different. When did? Oh, I hate the little things. There we go. Yeah, November 2nd at 10:30. So 10:30. Okay. Um, this happens. We'll get a reversal. It'll come up, and we won't get a signal to get in. That's okay. Next bus in 10 minutes, right? That's how we go through that process, and it's important to understand what that process is, right? So right now we have a way we can evaluate our three-step setups. We can evaluate our bot setups. My bot setup is different than what's on the library in that I add a momentum section. Okay, so um, for the bot, we look for consolidation after a bullish or bearish move between 33 and 66% retracement of that move. If it's greater than 50%, I'll add a percentage of risk. But in the case of a bot, if it gets even 1% beyond 66%, I'm out. Right? I'm not going to trade it. That's not a bot for me anymore. Okay. I am very strict about that 33 to 66% range. Um, Brian's a little more, gives himself a little more leeway. He can go a little bit outside of it or sometimes come in just a little bit above that 33% if it's just a tiny bit. But I don't like that ambiguity personally. So I'm very strict about my 33 to 66%. Either one can work. Just paper trade it first. Make sure that it's working for you before you ever risk real money with it. Okay. Um, then for my bot, I look for momentum signals within volume or price momentum. So I'm looking at OBV, MACD, and RSI. I don't use Willy for my bot setups, and you'll understand it why when you learn about Willy. Okay. But I do use these three signals. My rules are still the same though. I need at least two of these reasons to agree for me to get into the trade. If all three agree, then I'll add a percentage of risk. Okay. And what I'm looking for there is a little different than what I'm otherwise looking for, in that I'm not looking for divergence. I'm looking for um, convergence. So if I'm looking at a bullish bot, I want to see W's in OBV crossing the EMA with volume impetus. With MACD, I want to see W's. With RSI and not divergent, just W's. With RSI, I'm just looking for W's because I'm looking at continuing a trend. Okay, and then I look for price structure. Once I have those validated, then we look for a couple things of price structure. The bot is reliant that we have three successively higher lows for a bullish bot or lower highs for a bearish bot. Hold on. Excuse me. Um, And then following those three higher lows or lower highs, we then look for a market structure signal to get us in. Any candlestick entry will allow entry, right? Um, if we have our three higher lows and a W, then I will add a percentage of risk if I've got two levels of support for my market structure. Thank you um, for the bless you. They appreciate it. And then we have our stop management defined in these setups, right? And our profit objective, right? So in the three-step setup, your profit objective is 50% retracement of that latest move. In a bullish bot or in a bullish three-step setup, the move that took us down into the reload zone, 50% of that move is our target, right? In a bot, it's an ABCD that we use to determine our profit objective. With planting flowers, it's a little different. Okay, we are often exploring all-time lows. So what I want to see for location is that price is very low over the last year's action. Below Mountain Man is acceptable. I will add a 1% for my location if we're at the line in the sand or 88.7. Um, but I stop adding a percentage of risk if we go beyond the full range, right? If we're in all-time new lows, I won't add a percentage of risk for the location, but I'll move ahead with it. And what I'm looking for is that a return to a 38.2, so a retest of that first stop, represents a doubling in price. That's what I'm looking for in terms of location most adamantly, right? I also require some fundamental um, confirmation. So for equities, I want it to conform with the WDB or VCIM criteria. For cryptocurrencies, I use the altcoin scoring criteria. You can find these on our library. Um, then I look at momentum, right? Again, at least two of these have to be true. If three or more are, then I'll add a percentage of risk. Um, and these are what we will be learning right now. You have OBV, okay, and I think RSI. We know enough that we can use that. We're going to be learning MACD and we're going to be learning Willy. And then we look on price structure. I'm looking for a weekly double bottom. Okay. And then I describe where we take profits. And in my case, um, because of my objectives and my plan, it's important to note that I sell all my remaining position at 8 times purchase price. So I'm moving it back into either Bitcoin in terms of altcoin currencies, or I'm moving it into the US dollar in terms of my equities. Okay. Um, Brian has a trading plan that he uses where his goal is the accumulation of a wide variety of altcoins. Okay. In that case, you wouldn't necessarily have any point at which you will sell all your remaining position because you kind of want to have a little piece that's just free that you're riding around with, right? So you might sell his half his position at 2 times and another quarter at 4 times purchase price, and then just leave the rest forever. Um, that's going to depend on what the goal of your trading plan is. Okay. Um, okay. What? Hopefully that helps. Right. It's an overall plan. Right. And right now, I think you've got everything you need to initially start looking at planting flowers, three-step setups, and bots. Right? We're going to be learning some more tools that are perhaps a little more useful as we go to them, but we've got the basic picture together now. We can start evaluating these setups, and I recommend you do that over this next couple of weeks. Start evaluating these specific setups. Start doing some paper trades on them. Okay. Chesner, thanks for coming. We'll see you later on, man. Or woman. I don't know if you're a man or a woman, but we'll see you later. Okay. What is a potential reversal zone or a short reload zone? It's two different things. Potential reversal zones we won't get into in level 1. Okay. Potential reversal zones are something you're going to learn about. PRZs are something you're going to learn about when you do advanced harmonics in level 3. Okay. And then a short reload zone is just a reload zone, right? So let's remove these drawings. If we saw this downwards move and then we're like, okay, I want to get in on a future downwards move, that's when we're talking about a pull back up into a reload zone, right? And a short reload zone is just that. It's a reload zone that occurs in a short or downwards market. Okay. And then, are you going to show us bring out the vimp? I can, sure. All right, so there's another script in here that our Benjamin, one of our site veterans, wrote. Where you at? Where you at? I thought it was up near the top. Or maybe it's just called the vimp. There it is. Piquet is his name on TradingView, but that's Benjamin, our old site veteran, and he wrote this script to help visually see the uh, movement and volume, so you can identify volume impetus a little easier, right? Um, and the thing that's cool about it here, you can even do this without the volume bars, so you just have the lines, and that can sometimes be easier to see your three higher lows, or sorry, three lower highs, and then a move below the lowest between them, right? Look at that. You see how clear as day that the bears falling asleep is there, right? So that's pretty handy. Let me. There is a weird thing in here. I don't recommend at level 1 that you use this, but you might find it interesting. Is you can do this, and what he does there is he inverts the bearish signal, right? So instead of looking for three lower highs on the bears, if you use this, you'd be looking at three higher lows on the bearish volume, right? And that might make it a little easier for you to see, but just be careful about this. It's a little funky, right? Let me see if I can find a link to that. There we are. Here's the link to that. Again, your people you're using free accounts are going to be a little limited because you only have a certain number of um, indicators, but I suppose that would take the place of your volume, right? So you could take this existing pane above, move to existing pane above, and then delete the volume. So you could do that. That might be a little messy though. I don't know if that's clearer or less clear for you all, but that's the way you can do it. And there's nothing that says you have to overlay these, right? You can always go to new pane below and look at them as separate panels. There's nothing wrong with that, right? In fact, that might even help, like Randall, that might help you to uh, see the volume a little more clearly if it's just in its own panel. So, all right. Guess that's all the questions in the Q&A sheet. You guys got anything for me in chat here? Anything you want me to go over or talk about? Questions about anything? For once, we've got a fair amount of time left over. Let me take a look at some of these. Do we get access to level 2 and level 3 later in this course? Well, this is the level 1 course. So once you have passed this level 1 course, you can sign up for and pay for level 2. And once you finish level 2 and pass that, then you can sign up for level 3. But those are separate subsequent courses. Rashida says last 15 minutes have been invaluable. More of that would be great. Absolutely, I don't mind showing you my process at all. That's the whole point. Let me take a look at a couple of these trades in here. I've been neglectful of the um, trades you guys have been putting in here, and this is very, very important. Taking time to do this, getting into the habit of putting these trades on here is really critical. Okay. Good luck on passing level 1. I hear the instructor's a tough one. It's not too bad. Don't be scared by it. Um, all right, so let's take a look. BTC USD. You have no setup listed, so I think you're just probably showing some stuff or asking a question. Boy, I like how clear this chart is to read. Okay, press top of fractal, big ol' empire fractal. See it on a break of this line. Yeah, yeah. I mean, can you understand that we may or may not be in a good location, and we really want to see location first. But if you're just looking to evaluate a fractal, sure. Um, Here's the big problem with this, right? Big, tall uh, structures like this. The problem is you have this huge risk window, and so to even get a 2-to-1, you've got to expect prices going to go all the way down here, and that's probably not very realistic, right? Um, the 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 conservative estimate is on this upwards move. If we retrace, we'll retrace to a 50% of that, so somewhere around here, right? Um, so very often when it comes to market structure, and this includes candlesticks, what I will do is if I have an empire like this, um, I will set a bid if price moves beyond here. So that's my positive signal. If price moves downwards beyond here, and then I look to retrace up, I will set a bid, so a sell order, at this candle body open of the candle that created the market structure. Now that's way up here, and it could be price comes up here, hits that, and keeps moving. But my risk is only this small amount here at that point. Um, and then I'm looking at taking profit somewhere around the 50%, and that might actually get me um, a trade that I could take, right? Whereas something like this, I'm expecting price to come all the way down to the 886. That's not very realistic, really, right? Um, Even though the empire is coming into the risk to reward ratio is non-favorable. Yep, you got it. Yeah. So your evaluation on this is spot on, right? Absolutely. Good job. And I love how clear that chart was to see. That's really nice. All right, then you got one here on link. Trade location, 76 of a smaller range, fractal break lines, 3-bar fractal. Yep. Yeah. Yeah, that doesn't look bad. I'm a cheap ass. I almost never enter up here, but I can. There's nothing wrong with entering here. I'm a cheap ass, and I like to get really good, like risk to reward ratios, right? So again, my order probably would have been down here. It looks like we never went down to that, so I would never have gotten filled. Whereas somebody that entered here would have gotten filled, right? So that looks good. It's also interesting to note. I don't know where your location is. So this might be a good location for a buy. You are in a good location off of this move, right? So I would say actually this is like a 3-step setup. If your target were 50% of this downwards move, somewhere around here, that would actually conform pretty well with a 3-step setup because you're in a reload zone. Um, you're looking at market structure here. We don't have momentum, so we've just learned this last week, but take a look at OBV and see if OBV would have supported this trade. If you have an OBV signal here, and then you enter the trade here and target the 50% level, then you've got a 3-step setup. Okay. Right. Mm, there we go. I've got a couple questions in here. JDC says, when you were explaining about the adding 1% risk, what does that mean in practice? In practice, what that means is how much risk am I willing to take? So how large of a position size am I going to take, right? So um, in the example I was using here, right? I think we had uh, just 1% so far. So I start with 0%, right? And then when we're in a good location like this, then I'm going to say, okay, so now I'm willing to buy a large enough position that if it goes against me, um, I will um, risk 1% of my um, uh, available funds, right? Uh, we were we had one signal but not two, so we were waiting on that. If we got three, so if I had OBV and RSI and MACD, which we'll be learning, I think MACD is next week. Um, let me look really quick. Week 9, yeah, MACD. So we'll learn MACD next week. So if I had all three of those giving me a good signal, then I might add another percentage of risk. Then I'd be at 2% that I'd be willing to risk on the trade. And then we get market structure in. And if market structure is like a nice wide W, which it is not here, but if it were a nice wide W with fractals at each of those lows and they were at distinct levels, then I might add a percentage of risk for that. And then I'd be at 3% risk for my trade. I also have like an X factor that I'll allow, which is say more than one setup comes in. That I will add a percentage of risk for. Or say there's a big fundamental event that is in support of the direction of my trade. I might add a percentage of risk for that. And that can get me as high as 5%. But most of my trades are going to have an additional percentage of risk for a couple of the items. So most of my trades are like 2%, right? Does that make sense, JDC? And they're defined in my setups themselves, right? So I make note in here of if it's beyond this, then I add a percentage of risk to my trade. And I think it's important that if you're going to use this method, you need to define them in your setup, right? If three or more, add a percentage of risk to the trade. A head and shoulders or an inverted head and shoulders adds a percentage of risk to my risk size. Clear as mud. Okay, excellent. Uh, keep asking questions about it, man, until it absolutely makes sense. So I just wanted a systematic way of establishing how much risk I take in a position, but allow that to be somewhat dynamic. So I'm taking more risk on trades where I have a higher degree of confidence. Okay, that's the whole goal there. Uh, Taylor says, I came into class late. Where do I find the setups for the bots planting flowers? You can look in the pinned items on the class chat. So to show you what I mean, let me open up another. So if we come to the, eventually when it catches up here. Come on now. Okay. So if we come to level 1, Q4 2020 chat room. Oh, you said you got it. I'm gonna show it anyway, just so people see, but um, not necessarily for you, but for anybody else following the video. Come into pinned items, and you'll be able to see links to things I talk about in the videos, the individual videos, and then down below here, I've linked uh, different setups. I have 3 setups that I've shared with you guys. My bot setup, my 3-step setup. So the 3-step setup's what I use when I'm looking at a reversal in range. My bot setup's what I look for in a continuing trend trade. And then I've got my planting flowers one shared in here somewhere. I think it's down below. Planting flowers, where are you? And planting flowers is a setup I use. There it is.
Specifically, and it's funny, I actually say in here what I use it for. So this is a trend reversal setup intended for low cost assets where options aren't available and is specifically designed for a little old lady. So no leverage, risk to zero value approaches. Okay. All right, so JMO says, I've seen you do a three-step setup on a bot. Can you demonstrate a planting flowers one? Um, yeah, let me show you what we're looking for. So planting flowers, let's take a look at. Do I have a? Let me grab something really quick, and then we'll go through a list of like the Bittrex numbers. Where's it at? Refresh. Get rid of some of this stuff. Oh, maybe I have it in the class section. Ah, okay. I don't know if these are being updated anymore. I think so, but maybe not. Oh, this is all pretty old. I wonder if Benjamin's trading on Bittrex anymore. Looks like maybe not. 11 months old, 2 months old. Well, I'm gonna go. We'll see what's available still. All right, so grab that raw, save that. And what this is Benjamin had a setup, had a a script that was gathering the um, tradable assets at Bittrex, and so I would use that to grab like the Bittrex. Lately, I've just been trading at uh, what's it called? Coinbase. So just kind of the higher name things. But I want to take a look at, yeah. Oh, this was Binance, wasn't it? Well, whatever. I want to take a look at one of these sites that has a large amount of altcoins because we're going to see more there. So import, this is Binance. Okay, let's take a look. Not all of these are going to be valid assets anywhere, so we'll see them in red here when it's something that's just not on there. And that's fine. Let's see where we're at on the rest of these. So really, we don't like it's weeklies. All right, so if we're looking at ADA, for instance, okay, what we look for, let's just kind of look at the document, right? We want price to be very low over the last year's action, right? Below Mountain Man is acceptable. Um, what we're really looking for is a return to the 38.22% of this down move being twice the asset price, okay? So what I'll look for is, this is the overall move down. This is from 2017 to 2018, right? So this is pretty old. Let's look at just this last year's. 2019, 2020, where you at? 20's been a pretty up year, hasn't it? So I guess that's not good. So we'll look at as though we were doing this trade last year. That's gonna be the easiest way to look at this. Okay. So let's look at the beginning of 2019. Right there. We got this peak. So we'll come off of this peak. We look at last year's price action, right? And what we're looking at is when we have a price down here where what's half of 990 sats? That's 450. That's 45. So it's like 495. Is that right? Double check my math here. 495. Okay. So we're looking at a price of around 495 sats. Satoshis is what I'm talking about here. Um, being kind of ideal. Right? So that's like around here, right? Around this area. Um, So we might start hunting a setup around this area, right? Not specifically that spot. Kind of have an infinite risk. I put the risk thing on here just so I can see kind of what the price action does. But with a little old lady, we're going to risk this going to zero, so we're risking all the way down to zero, right? But what we want to see is, does this move up represent a doubling in price? In other words, if we retest the 38.2, am I going to be able to sell half on that double and get myself into a free position? All right, so that's what I'm looking for in terms of location. Okay, so location is down here, right? Let's put a line in. We'll see where location is. So we can come down here, put a line in. Coordinates is going to be 495, we said. Okay. And then, so as long as we don't make new lows, then 495 is going to be like our good location. Then what do we look for? So that's location. Um, Cryptocurrencies have to conform with the altcoin scoring method. So like I said, you can grab this off the main site. Let me library, fundamental screeners, altcoin scoring method. Okay. And we're going to evaluate this based on these criteria, these 10 criteria. Okay. And what I want to see is a net score of at least 3, right? Net score of at least 3. I'm not going to go through this whole thing right now, but let's assume that we have that on ADA. Okay. And we're looking back in time. So let me do the replay here. Back to last year. Okay. And so if we're putting the text on here, we go set up planting flowers. It's also worth noting you can save templates, right? So you can have a planting flowers setup text saved in here. I don't, but so location 38.2 8.2 equals 2x price. Momentum, okay? And we say in here, we're looking at momentum. We want to look at OBV, Willy, MACD, and RSI. We haven't learned Willy or MACD, so we're going to forget about those. Now we say we want at least 2 of these to be true for us to get in the trade. We need at least 3 of them to be true to add a percentage of risk. Okay, so far we're at 0% risk. We weren't really, well, let me look here. If we can get a price below 495, if our location's below that, so here, yeah, I say we could add a percentage of risk for this. So we're at 1% currently. All right, so we're going to say 1% on that. Momentum. Now all we have is volume and RSI to work with, right? So how does volume look? Let's take a look. Well, we want our bears to be falling asleep. So let me come into here. What I'm gonna, oops, that's not what I wanted. Come into here. What I'm gonna do is come over to style. I don't care about bulls. And I'm not gonna show volume bars. We need the bears to be falling asleep. We need 3 lower highs and then a lower low. High, low. Unfortunately, that's not what we're seeing. We're high, high. We need a 3rd lower high to get us into this trade. So we're still hunting volume impetus on here. And we don't have a W crossing the moving average. Now let's go forward in time just a little bit. I think we get a W crossing that EMA here pretty soon. All right, so at this point in time, okay, we've got low, we've got high here, high here. We don't really have another peak. I'd like to see that. So we won't have volume impetus confirmation. We will have a W crossing things. So I want to show you this. So I'll do OBV W crossing EMA hunting vol imp. Okay. So vol imp hasn't really presented itself. So we don't have a full signal there. Do we have, what do we have in terms of RSI? We had some divergence here, I think. Well, I don't know if we can call that divergence. We have a W here, but we have steady lows here, so I don't know that we can call that divergence. I guess so. It's not the strongest divergence in the world. I want to see lower lows in price and higher lows on the indicator. Um, Man, I don't know if I could call that divergence. I guess we don't really have that either, unfortunately. So I'm gonna have to say hunting in here. All right, and then structure we don't even look for yet. Okay. Um, but that's how we go about it. We got good location. This a year ago. We had good location. We didn't really have our other signals that came in. I'd be interested to see what the Willy looked like and what the MACD looked like. Those might have gotten us in. But that's how we hunt that, right? Now, as it turns out, we did have price come up. If we got a signal, I don't know that we did, but if we got a signal to buy down here, looks like I don't think we ever did. Then we could have gotten long enough here. Maybe if we looked at a daily, that might have gotten us in, right? Oh, geez. All right, there we go. Maybe on a daily, right? If we're looking at the daily here, we've got W here overall. Boom, 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 boom. Let me draw that on here so you can see what I'm talking about. Polyline. We go. Boom, 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 boom. Right? We have a W crossing the EMA. At the same time, boom, 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 falls asleep. Now the problem is it wakes up right after, so I don't know if we could have gotten in before then. Maybe. Wakes up, it's way over here it wakes up, right? So I think at this point in time, we had one high, lower high, lower high, lower low. So I think we had a signal here. W or RSI, I don't know, man. Let me look here. This is higher lows, or is it the same level? Same level. I don't love the same level thing. I want to see higher lows. Especially because I think we have higher lows here. So we had a W in RSI, but we still didn't get the signal we needed. That's unfortunate. We got market structure in here. We definitely got a W here we could have worked with, right? Can you see? Let me widen it up a little bit so you can see a little better, right? On this candle, we would have confirmed a W down here. I wouldn't have gotten filled. I would have put my bid here. But other people might have put their bid at different spots. Could have gotten filled there. I'd have had the bid at that 495 level, right? You would have gotten filled on that. So we don't, given these signals, we don't have what we need to get in on a trade. Okay. We don't have the divergence in RSI, and we don't really have any other momentum operators we can use yet. So let's come back to this. I'm going to leave these charts on drawn on here, these drawings on here, and let's come back to this when we talk about uh, MACD next week. We'll see what MACD looked like, right? Maybe we had a signal again, but that's how we get in. And then when we get into the trade, we put our sell orders in immediately. So we sell half on a double, which would have been this 38.2 level. We sell another quarter at 4 times, right? So 4 times would be 1980 sats. Should have been up above here, right? So we would have gotten our, if we'd gotten the signal get in, again, I don't know if we do. I don't know if we have the MACD in here or the Willie to get us another trade. But if we did, we would have gotten our free position when we came up and we hit this level. And then we'd be just riding that other half of our position until we got there. Hopefully that makes sense. We can look at some other stuff too. Let's see what we got. Let me go back to a weekly. I often look at weeklies for my planting flower setups. They can take quite a long time to mature, but I'll look at weeklies initially to see location. When is this? March 19th. Okay, and this is what I'll do. I'll just hunt through. Looks like I did some charting on this earlier. It's interesting. Okay. So, sorry, I'm getting myself distracted. So yeah, so that's planting flowers. We're looking at things that are like at all-time lows. Um, Typically with planting flowers, I am risking very small amounts, right? I might have 1%, I might have 2%. Um, and we're risking that going to zero, right? It's a little lady risk strategy. So we're not using leverage. We're just buying and then we're setting our sell orders on it. It can be really useful on a platform where you don't have conditional orders, where you just have like what you own and then you put the sell orders in. That can be really useful for that kind of scenario. But it can take 6 months, it can take 2 years for a uh, for that sell order to happen, right? So it's kind of a fire and forget thing. All right. What's I doing? Oh, I was gonna look at the shared log some more. And let me, guys, just ask any questions you got. We've got some discretionary time here, so I'm gonna be going over here as like filler, going over people's uh, entries into the shared log. But I'd like you to ask any questions you've got. Things like what JMO asked is perfect, right? This is a great time for us to go over that. Let's see, this is Coinbase. Ooh, I like Coinbase. Do I have any setup? No setup. Weekly RLZ entry after hammer key reversal. Interesting. Let's take a look. All right. Well, it looks like you got some other things on here. This looks like OBV here, I think. This looks like RSI, and I suspect this is MACD. Um, well, something I can show you that we learned this last week, divergence, right? So we've got lower lows. Do you see how this low is lower than this one? But higher lows across the same time period on MACD. I don't know if we have higher lows on OBV. That looks like it might be the same level, but RSI certainly is showing higher lows. So this is a divergence, right? We've got momentum divergence. Do we have confirmation? I'm not sure, but I think this point might be at or above this point here. And if it is, then that's confirmed divergence. Up here for sure we have confirmed divergence because we've gone This happened on the zero line. Now, something you're going to learn about next week when you're learning MACD, we have an inclination to use this zero line as a thing. It's not really. It doesn't matter where the W occurs. It might occur, W or M might occur offset from that zero line, and that's fine. In this particular case, the zero line kind of acted as our neck of our W, and you can see that we confirmed above that here. So this is maybe even this point, but for sure this one. So we do have confirmed divergence on MACD. So that's great, right? Um, you said you got in on the hammer, so that would have been this guy here, I think. Yeah, that's interesting. Um, it's not bad. I don't know. Is this? Did you say in here whether we had location? Yeah, weekly RLZ. That's what we're looking at there with that green box. So we have good location, we have momentum divergence, and we have price structure. So this is basically a three-step setup. Now, what I'd like to see for targeting here for price objectives is a three-step setup is going to risk not way down below here. You're going to risk just to here, right? Which means you might get stopped out. That's the problem with coming in on a hammer, right? But you're looking at taking profits at whatever the 50% level from this downwards move was. Now this is XLM USD, so let's take a look at that. XLM USD on Coinbase. What is the time frame here? This is a 4-hour. Okay. I'm not sure when this was. That must have been here. Wow, look at that. God, that just took off. Well spotted, sir. So this is November 4th, 5th. Okay. Yeah, look at that. That's the hammer that he got in on right there. Okay. So here's how we would have looked at it. Um, let's draw it up. Where's our, I just put that there as a placeholder. Now I'm trying to find the, okay. So overall, here's the reload zone off of this pivot up to this pivot. Okay. So let's put that box there. I think, I think this was well spotted. Whoever put this in, I'll look at that in a minute. I didn't catch the name when I looked. What is this? JMO. Yeah. Hey man, good work on this one. All right. So we had this move down. We spotted this divergence, right? So if we come up here, we can show this. Now this is an important thing. I talked about this a little bit. Um, Absolutely critical. Bullish divergence happens off of lows. So we want lower lows in price. That's what we're seeing here. And higher lows on the indicator. Think of this as pressure pushing the price up. Okay. Um, don't really have volume impetus, so I don't think we have a signal when it comes to OBV. Like we do have a W sort of crossing the moving average, but I don't think we really have an OBV signal. We can see on his chart the MACD, and we got a good MACD signal though, and that would have been sufficient. You'll learn about that next week. That would have been two indicators. That would have been sufficient if we have MACD on here. So let me throw MACD on here, just give you like a little precursor. MACD. All right. So on MACD, we just look at the histogram itself, okay? And you'll be learning more about this, like I said, this next week as you go through it. But we do have higher lows here and an M confirmed right here, right? Can you, and here, I'll show you what I mean when I say right here. So the M confirms on, here's our midpoint. So we have left shoulder, midpoint, right shoulder, and we need to be above that. So really we get that confirmation at this point, don't we? Yeah, on this bar right here, we actually got our confirmation. It's just here. So that was confirmed on this hammer. I don't know whether you got in on this hammer or this hammer. If you'd got in on this one, you would have gotten stopped out because it moved down to here. But then we got another hammer in place. Brian talks about, I can't remember the name of the person. He's a fellow trader who says that she always gives something, I think, 2 attempts, right? She gets stopped out, she still has a signal, she can get on the next one. But let's say either that happened or you got in off of this hammer. And let's say you got in on a break of this, right? You had to risk down to the low of it. And then let's look at our targeting. So for targeting, and bear in mind, guys, let me do a replay so you can see where we're at. We'd be looking at this here, okay? We look at this movement down, coming from here down to our ultimate low, and we do a 50% level. So our target for taking profits is here, okay? Now, hammers, single candlesticks, they're riskier because your stop is pretty close to where you enter, right? And you only have that one level, but the risk to reward's pretty high for that same reason, right? This is a 4.3 to 1 risk reward to risk, right? And then we would have gone through and you would have gotten seriously paid. Boom, look at that. It's huge. Now, if you'd gotten in on this fractal, as opposed, right? Now this is all looking hindsight's 2020, right? So bear in mind, like you're not always gonna be able to know you can do this. But like if I saw this, this is where I would have put my bids in. Okay, let me move this down. Um, if I got in off a fractal, I don't often get in off fractals, but if I did, I would set my bid at the candle body open of the candle that completed the fractal, which would have been this one, because I'm a cheap ass. It looks like I wouldn't have gotten filled, right? Because it would have been here. Would have been close. Um, I know people who will look at the range, and this is another way of doing this. This range here, they'll do like it's a regular bullish retracement, and they'll get in at like the 78.6 or the 61.8 is more common, right? So where's our 61.8 of that little range? That would have been here. And so they would have gotten filled on this dip here. Okay. See what I did? I just took the range of just this candle. Looking at the 61.8, which is like here. So that's not too that's not too uncommon to do that. Um, come on, there we go. So overall, I think you have a well spotted trade there. Um, you definitely spotted that divergence, which is great. And like I said, we're going to see MACD this next week. So you guys are going to be able to see why MACD is particularly useful for price divergence, right? OBV didn't really give us love on this particular trade, but the rest of that looks absolutely fantastic. Great job, JMO. Linda Bradford, thank you. Uh, so, fantastic trade there. Really liked seeing that. All right, guys. It's the top of the hour. Let's go ahead and call it and let Brian get into his Broiler Chicken show. Any questions you have for Brian, please put them into that BCS document. I know that was linked just a little bit ago. And yeah, I think that's about it. Looks like we got a threaded comment here. Let me make sure I address that before I go. Maybe. Boy, my internet's been awfully slow today. Uh, come on, load for me. bear with me just a second, guys. I just want to make sure that if you've got a question here I haven't answered, that we either get that answered or okay, no, it's just somebody saying that um, in response to a comment I made on a question. Okay, so we're good. All right, guys, I'm gonna let you go. Have a good rest of your day. Have a good week. We're learning about MACD. So, like I said, in my setups that you have copies of here, for my momentum, I look at um, four different momentum sources. I look at RSI, MACD, OBV, and Willie. We're learning about MACD next week, and then the week after, we're going to learn about Willie. So we're getting to the point where we're starting to put all this thing together into these setups and understanding what the setups are that we're looking for. Okay, so over this next week, please look for divergences. Practice with the OBV and MACD. See if you can find times where we have a divergence in MACD and we have a signal in volume. We have a signal in OBV. Okay, and see if you can post some more trades into here. Um, Practicing the posting of the trades is absolutely critical. So please do it. I know I've been a little lax on this last little bit on um, giving you feedback on them, but we'll have some more time next week as well after MACD to go over some more of that. So we're getting caught up there. Guys, have a great week. Fantastic questions this week. Great work that you all are doing. I'm really impressed. Okay. So with that said, I guess bye for now.